The retail CEOs, people like Hubert Joly at Best Buy and Brian Cornell at Target, say it's never been better. You listen to the folks in the automobile business, we're at the end of the cycle. Housing starts seem to be slipping. The medical people, healthcare people are very bullish after the election because it took all these healthcare cuts off the table. Those are now not on the table anymore, and they will continue full speed ahead with healthcare. So we are at the end of a very long cycle, and I think it could continue for several years. But everyone's concerned about risk. The biggest risks they're concerned about, Tyler, is global trade and China trade. They aren't so worried about Europe or Canada, Latin America. They're really concerned about.
Steve Odland, what is your kitchen cabinet telling you? And how did we go from really high growth and globally synchronized growth to a place here 11 months into the year with a big tax cut still playing through the economy, that we're talking about slowing growth and some talking about a recession come 2019, 2020?
Well, you know, the conference board member CEOs are diverse, as Bill suggested. And, you know, we do see some of our global CEOs who have a predominance of their business outside the United States seeing a bit of slowdown. We don't see that or hear that from our U.S. CEOs. And if you look at recent numbers, you see some slowdown in Germany, Japan. I think there's worries about the Brexit situation and what's going to happen in the UK. But the U.S. numbers look very strong. All of the conference board indicators, from the Consumer Confidence Index to the leading economic indicators to the expectations index, all say that the next 6 months expect to be very good. And our GDP forecast for this year is about 3.1%. U.S. forecast for next year is about 3.2%. But you do see the rest of the world starting to slow down next year, except for Latin America. So I think what we have is we have some slowdowns in some areas of the world, but it doesn't look like it's in the U.S. yet.
So you think Cramer's wrong? He's got it wrong. I mean, that's what it boils down to, no, Steve?
No, he's saying that there are some sectors and some CEOs. 10 years into a recovery, you would expect to see some of the leading sectors, some of the leading companies on that cycle to begin to slow down. And you would expect to see different geographic issues. China, of course, is a distinct case, but Germany and Japan also are distinct cases. So I think it's a mixed bag.
So if you're the Fed and you hear what Jim Cramer's saying and you're looking at housing and some of these other areas of concern, autos, what do you do? I mean, at this point, can you pull back away from a December rate hike?
Well, I think they shouldn't pull back. I think the Fed is doing absolutely the right thing. All the bankers I talked to were very satisfied. Liquidity and leverage have never been in better shape. And I think the Fed is doing the right thing to balance the tremendous amount of economic stimulus late cycle with being concerned about inflation. And a trade war could trigger that. So I think that the Fed is doing just the right thing. And the business people I know are not concerned about the Fed. The politicians are concerned, but not the business people.
As you, Steve Odland, look at the sort of the landscape out there, and I want to get your perspectives too, Bill, on the trade question, the president, it feels to me like the market is being led by the nose. Today, we hear the president say that he's very hopeful that a deal can be struck. He's not happy with the parameters as outlined in apparently a communique from Beijing, but that he's hopeful about that. The next day, we hear something else. How concerned are business leaders about trade, and particularly, as Bill mentions, trade with China?
Well, I think what you hear behind the scenes is there are talks going on. He said that again today. Those have been pretty continuous. I think that they have high hopes that there will be a deal. Administration officials have been out saying we don't want a trade war, we don't expect a trade war, but we want fairer trade, and we needed to equilibrate the tariffs in order to have something then to negotiate back down. I think that's what you're seeing today. The U.S. only relies on China for about 5% of its exports, though, so it's not as big of a deal for us. I think if you come back to the U.S., remember, we're going into a record holiday season. It should be the biggest holiday season ever in history. Of course, online's going to drive a huge percentage of that growth. But Bill is right about the Fed. But the Fed is not only raising rates and tightening in that regard, they're also trying to work on a $4.5 trillion balance sheet. So the big unknown is this double tightening, which we've never seen before.
My numbers may fail me here, but I believe, Bill, that the trade deficit with China this year is worse than it was last year.
Yes, it is.
In part because the Chinese are importing much less from the United States, and the United States is importing much more from China, probably to stuff inventory ahead of tariffs.
And this is a big issue for all the global companies I know. If you're Mary Barra at General Motors, you're concerned because you sell more cars in China than you do in the U.S. The last thing you want to do is a trade war. The same with Tim Cook when you met with at Apple. He does not want a trade war. They're totally dependent on this. In terms of imports, those are going to continue until there's tariffs, but that will affect things. Take Walmart. You're dealing with consumers on a fixed budget. So if prices are going to be raised, because of Walmart, based on costs, they're going to have to raise. They haven't told me that, but that's what you can see
That's
happening.
what you normally do in a business.
You have to do it.
When your costs go up.
And so I think everyone is nervous about it. The thing they've learned, though, is the market responds to what this president says. The CEOs are not listening to that unless they're directly attacked. They're just not. They're kind of ignoring it. And they're saying, we have a strategy. We have to go forward. We're not pulling factories back from overseas to the U.S. We're going to implement our strategy, and we're going to go forward. Yes, we're concerned about the growth overseas, but we will continue to go forward with our strategy. There's no change in that, and that's very important.